Wanted to talk to you a little bit today about, does it make sense to buy down your interest rate? Hey everybody, Chad Helmcamp here with BWC Lending. In our business, you're going to hear things like paying points. Typically, if you're paying points, that means you are buying down the interest rate. What is it? And a point is also, you'll hear discount points, you'll hear origination points, you'll hear different things like that. Does it make sense to buy down your rate? Again, it really depends on your specific circumstances. Most of the time, a homeowner does not stay in their mortgage for more than 5 to 7 years. The average American tends to move every 5 to 7. Over the last decade, that's extended out a little bit. Probably we're more like 7 to 10 years. But typically, one discount point would buy your interest rate down by 1/4 in interest rate, and it takes you about 5 years to break even. And so a lot of times, if people are in that sort of 5 to 7 year time horizon, a lot of people are looking to move right about the point they're starting to save money with that lower interest rate. Couple that with the environment we're in right now, where rates have gone up rather dramatically in a short period of time. A lot of experts are thinking that with what the Fed is doing, that in all likelihood we could see long-term mortgage rates come down within the next 2 to 3 years. Of course, I have no crystal ball. I can't guarantee that's going to happen. But when I'm talking to my clients right now, I'm not really encouraging paying a lot of discount points because, again, I trust people that are smarter than me, and a lot of the experts are thinking that in all likelihood we could see rates come down in the next few years. If that's the case, we may be looking at refinancing some of the loans that we're originating today. Just to give you a quick example of buying down an interest rate and how it might work. Let's assume that you're borrowing $300,000 at an interest rate of about 5%. That would produce a principal and interest payment of about $1,610 a month. Typically, one discount point is 1% of the loan amount. So in this case, that would be $3,000. You'd pay $3,000 today to lower your rate to 4.75%. At 4.75%, your monthly payment would drop to $1,564. So you're saving about $46 a month. So at the end of the day, if you just take that $46 a month, take your $3,000, divide it by 46, it takes you 65 months to recoup that $3,000. That's a long time to recoup that $3,000. I'm a big believer in the time value of money. I'd much rather you have that $3,000 in your pocket. Maybe you need to buy a couch, maybe you need to buy some appliances, something along those lines. But again, if you think that this is the last time you're ever going to take out a mortgage and you're going to pay that loan over 30 years, it could make sense for you. But if you want to talk about it more specifically, feel free to give me a call. Love to answer any questions you have. Chad Helmcamp, BWC Lending. Have a great day. Bye.